Good morning, everybody. Happy Monday to you, everyone. Great to be with all of you today. My name is Bob Lang, and I run explosiveoptions.net. It's Monday, May 22nd, 2023. Let's take a look at markets here. So looks like we're up a little bit this morning on the futures. We were down most of the evening and have rallied back a little bit here, up about two handles. NASDAQ down a little bit, got a downgrade on Apple this morning, and also Meta got hit with a monster fine in the EU. And Micron is being banned in China. So tech names are a little bit weaker this morning. We do have up on Tesla, which we have some of that. We did add some of that last week. Dow Industrial's up about 18 points. We see the VIX and the VIX futures also up a little bit this morning. This is a pre-holiday week, right? Of course, Monday, next Monday, a week from today, is a holiday, Memorial Day weekend, and markets will be closed. So we often see volatility receding into a holiday. However, it has to recede from probably a higher level. So we may see a bit of a pop in volatility, which means a drop in the markets by midweek, and then a little bit of receding in those. But if we don't get that, and we get volatility staying low, or maybe even going lower below 17%, which we're at right now, look out next week, because I think we could have some a bit of selling, even as we're coming up to the end of May. All right, so end of May comes in next Tuesday and Wednesday. Wednesday's the last day of the month, so we'll have to see how things go this week. As far as trading this week, again, we see that the markets are up a little bit this morning. Again, we see Apple down a bit, Amazon's up a little bit. We see Google up a tiny bit as well too. All these stocks have been pretty strong over the past month and a half. Take a look at some other indicators as well. I want to show you the new highs, new lows list, which is making some great improvements in the chart here. And you can see that after pulling down below the zero line a couple of weeks ago, we've made some moves upward. And this kind of feeds into the argument of, and again, it's been a valid argument that very few stocks have been leading the markets higher, right? The Apples, the Amazons, Googles of the world have been pushing the market, pulling the rest of the market higher. We see the big institutions coming into those names, and also seeing some of the other stocks, trying to pull themselves up from behind. But we've also shown that the breadth numbers, for instance, like stocks above their 50-day moving average or stocks above the 20-day moving average, have been lagging badly. And just because these stocks have been doing well and they're performing at a very high level, it doesn't mean that the rest of the market is doing the same. But this new highs, new low list is interesting because it tells us that that may be changing, that may be turning, right? And does it necessarily mean that these big caps names are going to underperform while the rest of the market performs? It could. I'm not sure, but we'll have to see what happens. But what this is telling us, it means that the rest of the market is starting to join in and go higher. Okay, and that's an important thing to recognize here, right? We have to recognize that the character, at least for the short term, of the market is starting to change and to become much broader in terms of rallies. Okay, it doesn't necessarily mean a few stocks that you can get into are going to go up. It means that several other names that you can find, the charts are doing much better. So that's something to think about. Let's take a look at the NASDAQ here. And you can see this is where the power has been in 2023. So the NASDAQ 100 index, the QQQ is the proxy for this one. This thing is up over 2,000 points over the past 4.5 months. And indeed, a high up here is very, very impressive, with the rest of the market kind of lagging behind. We know the NASDAQ is leading the SP 500 up about 9.5%. The Russell and the Dow Industrials up a little bit on the year, but not too much, maybe 1.5 to 2%. All-time highs on the NASDAQ, of course, 16,500 at the beginning of 2022, end of 2021, and we dropped severely. We dropped down 30-something% in 2022, and trying to get that back. But we do see a pretty nice W pattern formation here, and we did make a move this last week above the 100 moving average, 100-day moving average. You see that gold line right there, and through the cloud. And then a couple weeks ago, we went green on the weekly chart for the first time since the middle of 2022. So it's looking positive for the NASDAQ right now. We certainly wouldn't be surprised to see a bit of a pullback. We know Fed policy remains tight. Let's take a look at that right now. Here's the latest on the Fed funds futures for June, and we're at 28% chance of a rate hike next month, 72% chance that they're going to remain at 5 to 5.25. Going out to September, we see that 52.5% chance of staying right here. Again, if we do get a rate hike next month, and I think that there's going to be a good debate going on of whether we need another rate hike or not. Even a couple of the Fed governors this morning, Kashkari and Bullard, thinks that we need more rate hikes. In fact, Kashkari said maybe up to 6%. Bullard is saying maybe up to 5.5 to 5.75%, which would be about 2 more rate hikes. So you know what I mean? Again, we have a lot of data to parse through. They're going to do the same thing. That's what Chair Powell was saying on Friday. That we have a lot of data that come out, and we're going to be, basically making our decisions from one meeting to the next. So no forward guidance there. I think the market was a little disappointed to hear that. They wanted to see more in terms of a bold position against rate hikes by Chair Powell. He wasn't willing to tip his hand towards that. And we go out to December at the end of the month. Of course, we have 5 more meetings left in 2023, June, July, September, November, and December. That's 5. And by December, it has us back down to 4.5%, roughly 4.5 to 4.75%, right? So that would be if we get a rate hike or two in the next month or 3 months, back down again by November and December. I think the market has it wrong, but we'll learn more in the June meeting, because the projections are going to come out with economic projections, the Fed funds futures projections, unemployment, and so forth. We do have a very low unemployment rate right now, and eventually that is going to kick in with some of the job losses that we've had over the past several months. That's going to kick in later on in the fall. But for now, listen, you know what? Fed funds futures are portraying a higher rate hike. So let's take a look at the Atlanta Fed Fed GDP now, and you can see that the GDP now is looking at a 2.9% gain in the second quarter. We're already halfway through the second quarter now, and they're still looking for 2.9 coming in. The Atlanta Fed estimate. It's been rising for the past couple of weeks. If we get another strong jobs report, this number is going to be pretty valid. It's going to be it might even go higher. So coming off of a first quarter, which we're going to get a revision later on this week, coming off of a first quarter GDP of 1% and moving up to 2.9%, you can see that clearly the estimates here and the GDP numbers are not in the recessionary camp. In fact, it's a slow growth scenario here. It's pretty mind-boggling, if you ask me, that the economy could grow this strong with such a tight labor market and such a very hawkish Fed policy. But it is what it is, and the market still seems to move along here. So, that we'll have to see the changes that are made over the next several days. The next change will be made this coming Friday. We do have jobs report coming out, I think, next week, a week from Friday, on the 2nd of June, and a lot of data coming out in front of that. So, listen, just take everything easy, take it slow. There's nothing really to get excited about here. Volatility is low. We do have this debt ceiling business to deal with, to worry about, of course, over the next week and a half. And I think it's gonna get settled. as it always does. The Fed is the Treasury is not going to default on the debt. It may put it off a little bit and make people feel a little bit of uncomfortable. But I think that at the end of the day, they're going to get a deal done. Take a look at this weekly chart of the S&P 500, which I put up there from TrendSpider, and you can see that we have a series of higher lows here from last fall, but we're bumping right up against this trend line here and some resistance from 2021 and middle part of 2022 when we broke down. So until we get above that level, which is probably about 42.20, and I think that fills a gap up there on the S&P 500, close to 42.20, 42.25. Until we get up there, well, we're still kind of at the top of the range here. So just keep your eye on that. Oscillators. Last thing I'll tell you about is are not really overbought, oversold. They're kind of in the middle, with the New York Stock Exchange oscillators are minus 13. The NASDAQ oscillators at plus 60. So there is some room to go up. I think we could back off a little bit this week and start moving back up. A lot of choppy activity. Be a stock picker. This is a stock picker's market, and you'll benefit from that. Always, as well, keep a lot of protection on, and it's important to have that protection on, even if the markets are going up. You're going to feel a lot better being able to put some trades on when you have that protection in your portfolio. All right. Have a great day, everyone. Kenny Lane from Beatles. Loved it. Have a great week, and I'll see you guys back on Thursday morning. Don't forget to read the Daily Bites, and also don't forget, I have a spread trading webinar with Sam DeMarco coming up on Thursday after the close, May 25th. Don't miss that, and I will. I'm sending out a lot of invites as well. It's a free one to join in, and it's going to be a great webinar learning about spread trading. Have a great day, everyone. I'll see you guys on Thursday. Bye.